All right. So, hello and welcome in, everyone. Thank you so much for joining us today. My name is Hong Lin, and I'm a part of the Careers and Professional Development team. Specifically, I serve as Employee Relations Partner here at WGU. We're very excited for today's session on understanding credit reports and scores with Commerce Bank. It's always a pleasure to have the Commerce Bank team here with us. They've joined us for previous sessions where they shared a great insight. So we're very excited to have them back. And today they will be sharing on how components of credit reports and scores impact your financial life. With that, excuse me, I'd like to hand it off to our awesome presenter today, Cassandra. The floor is all yours.
Thanks, Hung. My name's Cassandra Kropp. I am part of the workplace team in Commerce Bank. And we're going to work today to bring you my milestones and some education about credit. So in this course today, you're going to learn the basics of credit management, both holistically and practically. First, the course looks at credit as a whole, revealing many different types of credit products available and how credit influences almost every other area of personal finance. Next, the course breaks down the various factors that influence your score and how lenders may use these to assess your creditworthiness. And finally, the course is going to offer guidance and tips on how to read and analyze your credit report so you can avoid credit pitfalls and take a proactive role in monitoring and managing your credit score. So this is our agenda today. First, we're going to talk about what is my milestones, why financial wellness is important. We're going to talk about credit use across generations. And then we're going to get into the understanding credit reports and scores. And then we'll have an action item and some time for questions as well. So the reason we are here today is because WGU has partnered with Commerce Bank to bring in My Milestones as a free benefit for all of you. And My Milestones is a financial wellness platform that provides objective, interactive tools, education, and solutions to empower users to take control in their finances. So we are all in different situations. And with My Milestones, you can gain financial education on topics that are relevant to you. My Milestones offers a variety of different learning mediums such as courses, interactive tools, articles, start here guides, videos, infographic, webinars, you name it, it's on there. It's also important to remember that any personal information that you put into My Milestones won't be shared with WGU. So with My Milestones, you're able to take control of your personal finances. I'm curious to know what grade you all would give yourselves when it comes to your own personal financial knowledge. If you just want to drop your answer in the chat, Matt went ahead and put that poll in there, and I'll give it just a moment. C of B. B, B minus. So we have learned that 41% of American adults say that they deserve no better than a C when it comes to their own personal financial knowledge. And this is exactly why My Milestones is so important. A lot of times when we're thinking about our benefits, we think about our health benefits and our mental wellness, but financial wellness has a huge impact on us as well. And with My Milestones, you'll have the ability to improve your grade and feel less stressed about your finances. So we're going to talk a little bit about credit use across generations. What generation would you all think has the highest number of credit cards? You think it's Gen Z, Millennials, Gen X, Boomers, the silent generation? Go ahead and type in the chat what you think. So we know that Gen Z carries an average of 1.7 credit cards with the fewest of all the generations, while baby boomers usually carry the most, averaging 3.4 per person. That was a little surprising to me when I found that out, but this trend also applies to retail credit cards, which is really popular with the boomer generation, especially like, the Sears, the JCPenney's, you name it, everywhere had a credit card. And I think that definitely has some impact on that number. So with that, the generation that has the highest credit score is the silent generation. So younger generations like millennials and Gen Z have developed less developed credit histories, which can explain the lower score when compared to older generations. For example, on average, baby boomers and the silent generations have scores well above 700. So we're going to move into a live demo and where we can take our course. So I will give you all just a moment to sign in. If you take your phone, you can scan that QR code, or you can go to wgu.mymilestones.com, and Matt is dropping that in the chat right now. And that will allow you access to our content today. So I will leave that up for just a moment, and then I'll go into our live site. And once you sign in, it might look a little bit different than my profile here. I went ahead and made a demo profile and completed the financial wellness checkup, which is where you will want to start when you log in for the first time. And it also will prompt you to do that as well. So you'll see some pop-ups. But once you do that, here is your dashboard, and I will show you a couple things on here. The financial checkup, once you take that, you'll get specific recommendations based on your responses. So you can filter them by type, or it will just give you some different articles and videos to browse based on how you answered. Back on our dashboard, we have the welcome message from WGU. So I'm going to go ahead and pull that up. And then this is just your message. I'm going to leave it for just a moment. And then if you'll notice, we got 25 XP. So what that does, that's a survey. So what the XP does is it earns us sprouts. And sprouts are like the points on here. So once you earn sprouts, you can go to your garden and hit sweepstakes. And you can actually use 25 to enter into the prize pool. So every single month you can enter to win from $1,000 prize pool by redeeming your sprouts. So you get rewarded just for learning, and you can see it's very easy to earn those. You just get them by interacting with the platform. Another great way to earn those is by setting a streak goal. If you like to be reminded to stay on task, you can choose daily, weekly, or monthly, and then hit confirm there, and you'll see that pop up on your dashboard, and then you just earn some more pretty easily there. And then if you have any items you want to favorite, they'll also live over here. And there is the Commerce Bank Solutions tab. So you do not have to bank with Commerce to use My Milestones, but if you have a question and want to talk to a Commerce Bank representative, or if you want to explore our products and solutions, that is all available here. And if we have any promotions going on currently for WGU members that are on My Milestones, we have a $300 free checking account offer. So if you wanted to look at that, that is there under Learn More of the Commerce Bank Solutions. But today we are going to take Understanding Credit Reports and Scores. So I'm going to go to Courses. And then here it is. This will all be sent out afterwards as well in a PDF with a quick way to find the resources. I'm going to go ahead and do this as a demo. You'll take it on your own after the course, so don't worry about following along for now, because your answers are going to look a little bit different than mine. So each course is going to start with a personalized setup. So it's going to ask, how do we feel about credit reports and scores? I'm going to say not so sure. Are you currently a student? I went ahead and clicked yes. What year were you born? I put 2002. And these are automatically filled out from my financial checkup from earlier. So if you haven't done that, you'll just enter your info there. So every course has a pre-course setup to see where our knowledge is. So I'll have you all answer this in the chat. Which of the following is not a perk of having a good credit score? Do you think it's A, you can get unlimited credit, B, you can borrow more money, C, you can secure loans with more flexible payment plans, or D, you can secure loans with better terms? So which is not a perk of having a good credit score? Go ahead and type your answer in the chat. I see an A, another A. It is A. So you can't get unlimited credit just because you have good credit. That is correct. And so this is a true or false. If you don't have a credit history, it's a good idea to open a secured credit card. Do we think that is true or false? See a true. True, true. It is true. And we will dig into that as well. So if you're not so sure about it, just hang tight. We'll cover it. Your FICO credit score is calculated on 5 factors, including the length of your credit history. Is that one true or false? True. Question mark. That one is true. And then again, don't worry, we're going to cover all of these in depth. This is just to see where we're at. If you have bad credit, you will pay less interest on your loans. Is that true or false? If you have bad credit, you'll pay less interest. False. That is correct. And then what is something you can do to raise your credit score? Pay for everything in cash. B, write a letter to your bank. C, never check your credit report. Or D, always pay bills on time. What is something you can do to raise your credit score? See, quite a few D's, and that is it. Always pay your bills on time. Okay, so based on our answers, it's going to build us a personalized course. So we are going to learn about what is credit and why do I need it.
In its most basic sense, credit is the level of trust that a borrower must earn before a lender will be willing to lend them money. Another way to think about it is credit is your ability to borrow, to buy a product or get a service now and pay for it over a period of time. The more credit or trust that you have, the more money you'll be able to borrow. What's more, better credit may also lead to more favorable loan terms, such as lower interest rates and more flexible repayment options. For most of us, credit is something we started building during adulthood through loans and credit cards provided to us by banks, credit unions, or other creditors. But for students, there's one other factor that may already be determining your level of credit, and that's your student loans. Whether you know it or not, your credit might already be getting assessed based on how much you have borrowed and the speed and frequency at which you repay the money you borrowed to finance your education. If this is the case for you, don't panic. In fact, you should see it as a good opportunity to get started on building credit early, which you can do by keeping up to date, or better yet, making prepayments on your loans.
Okay, so paying back your student loans can help you build a good credit history. Is that true or false based on what we just learned? It is true. Good job, guys. Okay, and then we are going to learn about the different types of credit. So there's a few different products when it comes to credit. So the first one that most people probably think about when we talk about credit is credit cards. So credit cards are an open-ended source of revolving credit. You use it for everyday purchases. Often you can get cards with perks like travel or cash back, and interest accrues on unpaid balances. Another type is going to be a personal loan. That's going to be a loan taken out for a specific personal or family need. It can be taken out to pay for home repairs, medical expenses, small businesses. It might be a secured or unsecured, depending on the borrower's credit and lender requirements. And then a secured loan is a loan that has collateral or personal belonging attached to it that the lender may seize if the borrower fails to make payments. Unsecured means there is no collateral, so the lender is trusting the borrower to repay that. There's an auto loan. That's probably another one a lot of us are familiar with. That's going to be a loan that is secured with the vehicle as collateral. So you make regular monthly payments. They're typically from 36 to 72 months. And if the auto loan goes in default, meaning you've missed too many payments on your loan, the lender can seize the car. Student loans. Student loans are unsecured loans dispersed while the borrower is in school. They're paid back with interest monthly over a period of years. That they are used to cover the cost of education, not otherwise provided by savings, scholarships, and grants. A mortgage is a home loan. I always say something so silly. I thought mortgages were really bad all growing up because when you play Monopoly and you run out of money, you have to get a mortgage, but a mortgage is just a home loan. So it is a secured loan that allows a borrower to buy a house with the house as collateral. And typically they're paid back with interest monthly over 10, 15, or a 30-year term. If the mortgage goes into foreclosure, then the lender can take the home. Payday loans. Payday loans are a short-term cash loan, typically ranging from $100 to $1,000. They're paid back with interest and finance charges on the borrower's next payday, and they have very high interest rates and fees. I do want to say, from my experience working in a bank, payday loans are typically very, very predatory. So please try to avoid them at all costs. They charge a lot of interest and they take advantage of people that are in not great situations. I've seen one loan have 400% interest on it, and you're never going to be able to pay that back. So try to avoid those if at all possible. And then a cash advance. That is a short-term cash loan taken out against a credit line or an existing credit card. There may be limits of a few $100s, and it counts towards your credit limit. And it often carries a higher interest rate than credit cards, and there may be a fee for doing that as well. So those are some of the different types of credit. So another quiz, what are some of the perks of having a good credit score? You can secure a loan with better terms, lenders will be friends with you, there's no perks, or you can get unlimited credit. So A, B, C, or D, what do we think? It is going to be A. So you can secure a loan with better terms, meaning lower interest, meaning you save more money. So we're going to take a look at how lenders evaluate credit.
In order to determine whether someone is worthy of lending money to, lenders typically use scoring models such as FICO, Vantage, and a lender's own internal models. Everyone's credit score is comprised of the same 5 components, including their payment history, credit usage, length of credit history, types of credit used, and any recently opened lines of credit. Each metric is weighted differently by relative importance, but by adding all of them together, we arrive at a number somewhere between 300 and 850, with anything above 670 generally being considered a good credit score. In addition to credit scores, lenders also rely on credit reports to help determine the credit worthiness of a potential borrower. These are detailed reports prepared by one of the following 3 credit reporting agencies. Credit reports contain all of the information a lender needs to assess the financial health of a borrower, from their employment status all the way through to their borrowing record. By evaluating credit scores and credit reports, lenders are able to make a quick, informed decision about a borrower's credit worthiness and how much credit, if any, they can be trusted with.
So now we're going to learn about what makes up your credit score. So your credit score is calculated by 5 different things. 35% of your credit score is going to be from your payment history. 30% is going to be from debt. 15% is length of history. 10% types of credit, and 10% new credit. So we're going to take a look what might happen if I make on-time payments. So if you make on-time payments, that's going to have a high impact increase on your credit score. Your payment history greatly impacts your credit score. Even one late payment can lower your score by as much as 80 points, and it could take up to 7 years to recover. That's why automatic bill payment is great. You don't have to worry about accidentally missing a payment. So what might happen if I increase my balance? That could have a high impact of decreasing your score and take 3 to 6 months to recover. Generally, one should keep their utilization rate under 30%, ideally under 10%. A greater risk is shown by taking on more debt, even if it's under your limit. So what might happen if I open a new credit card? That's a low impact, but may decrease your score as well and has a 3 to 6 month recovery time. So opening a new credit card will decrease your score due to a hard pull on your report and the increased risk of more credit. But over time, the effects wear off, and the extra credit in turn lowers your utilization rate and should you use the credit responsibly. and what might happen if I get a mortgage. So that has a low impact, but an increase. So in the short term, your score may decrease due to a hard pull. However, with regular on-time payments, you just demonstrate responsibility by handling different types of debt. So which of the following is not a factor that's used to determine your FICO credit score? Is it A, your debit card use, B, payment history, C, types of credit used, or D, recently opened lines of credit, which is not a factor? It is going to be your debit card use. A lot of people think their debit card and their checking account ties to their credit score, and it does not. That is completely separate. So this is just a poll. There's no wrong or right answer. But curious if you all, has anybody checked your credit in the last year? Yes or no, and there's different reasons, but just give a yes or no if you're comfortable in the chat. Yes, that's great. Yes, yes, lots of yeses. That's great. So we'll put yes for our poll. 57% of people said yes. You can see how we compare. 20% said no because they don't know how to. 22% said no because they don't need to. And 1% said no because it's too expensive. So let's take a look at how to check your credit report. Sorry, double click there. So evaluating your credit report. Your credit reports and credit scores are tools for gaining access to affordable, high quality credit products and potentially housing and employment. So it is important to check regularly to ensure your information is up to date and accurate. So the first step is, where do you get your credit report? So there are a lot of resources out there for getting your credit report, but you'll want to start with the 3 major credit reporting agencies. Sometimes you'll see that abbreviated as CRA, and that's Experian, Equifax, and TransUnion. So you'll go to annualcreditreport.com. That is a verified official website, and you can get your free copy of your credit report each year. But they are only free once per year. If not, you will have a fee for obtaining your credit report. So a little tip on how to do that regularly without paying is do one at a time. So in January, you can check Experian, and April, May, you can do Equifax, and September, October, do TransUnion. If you stagger them out, then you don't have to pay for your credit report. And then annualcreditreport.com, that will be in our resources that we send out as well on how to check it. So how do you read your credit report? So once you have it, if you're ready to apply for a mortgage or new job, you'll want to obtain your credit reports and check through them carefully and making sure everything is accurate. So you'll look over your personal information, any debt history, special circumstances. That's if you've had any collection activity that might be listed there, like a lien or garnishment. And what do you do if you find an error? So it is possible that you'll find credit information on your report that is not yours. Most likely it is just an error, but you will want to verify and double check. So if you see any inaccuracies on your report, you want to dispute them right away. Each of the different CRAs do have a dispute process outlined on their website, and they are obligated to remove the information unless or until they get verification of its accuracy. And then using your credit report to understand your credit score. So your credit history does not have to be perfect to qualify for credit. If you've had a few late payments, it's more likely not a deal breaker. There are always ways to increase your credit if it's damaged or low. And then using your credit report to take action, making sure you're paying on time, reducing debt by cleaning up any old collection accounts, and then setting a calendar reminder to check your credit reports regularly. So what is your credit score? Don't share what your credit score is, but how many of you know what your credit score is? Or about what their credit score is? 1, 2 of us? Perfect. So 3, awesome. So if you want to get an idea of what your credit score is, there's a great tool called a credit score estimator on My Milestones that you all have access to. So I'm going to give a general example. Yours will be different. I'm just going to put some numbers in for an example, but this is a great way to give an estimate of where you're at. So we're going to select each type of credit account or loan that we have. So I'm going to say we have student loans and credit card debt and an auto loan. How many years ago did you get your first credit card or loan? So let's say 4. What is your total credit limit? So this is the credit limit on all of your credit card accounts. So let's say I have a $1,500 credit card limit. What is your total credit balance? That's how much I owe on all of my credit cards. I'm going to say I owe 100. And again, this is just a complete example. Yours will be different. How many times have I applied for credit in the last year? Let's say 1 or 2. When did you last miss a payment on any of your credit accounts? I'm going to say we've never missed one. Have you ever had a negative event listed like bankruptcy, foreclosure, tax lien, or collection? I'm going to say no. And then we'll get an estimate. So my credit score is great in this example. So it should be anywhere from 746 to 796. And it will break it down of the payment history, debt, length of credit, types, and new credit. And you can go through each individual one out of all the points possible and how many points. Something I would like to show. So we have great credit in that example, right? So I'm going to click Start Over. And we're going to do all of the same information. So our credit limit, our total balance, how many times we've applied for credit. But I'm going to change this one. Let's say I missed a payment 3 to 6 months ago. And we're just going to see kind of what impact that might have on our great credit score. Well, maybe. There we go. Okay. It had to think about it. So that took us from being in this excellent green to right in the middle. So that took us down quite a bit. So now our score is 556 to 206. So the reason I did that was because it was very surprising to me to see how much one missed payment 6 months ago could have such a huge impact on your credit score. And that is why it is so important to keep up with that and do the automated billing where necessary. So credit is an exchange of promises. So there's the consumer rights regarding credit reports. So the Fair Credit Reporting Act, or the FCRA, is enforced by the Federal Trade Commission. It regulates the operations of credit reporting agency, as well as how and by whom the information on your credit report is used. So who can see your credit report? Not just anybody can type your name in online and get your credit report. There must be a legitimate business reason. So if you're applying for credit or sometimes employment, you can see your credit report. You can access them through any of the 3 CRAs. If there has been a significant majority of negative information removed from your report, and then you can make sure it's true. All information on your credit report must be verifiable. And you can opt out. Many marketing companies will buy lists of consumer contact information to use in direct mail or email marketing efforts. You can opt out by calling 888-5 opt out. And I'm going to drop this in the chat too, so we have it handy. And then, so the Truth in the Lending Act, like the FCRA, is enforced by the Federal Trade Commission. It ensures that creditors disclose to you all pertinent information about your loans and other credit. This is helpful so that you can gain a full understanding of the loan and details before you commit. So if you've ever went to a bank or a car dealership and got a loan, they give you a lot of numbers, right? And sometimes it can feel very overwhelming and you don't necessarily know what you're looking at. But if you take the time, these have to be disclosed to you anytime you get a loan. So the amount of loan, the amount of money you're borrowing, The long-term cost of the loan, that's going to be the amount of money you're borrowing plus any interest that will be collected during the life of the loan. The interest rate, that's also known as the APR or annual percentage rate, and that's how much your interest rate will be. Any finance charges or fees that are included in the loan, any prepayment penalties. This is a very important question to ask when you're getting a loan. Some loans have financial penalties built in that will hit you with a fee if you refinance or otherwise pay off your loan early. Your monthly payment and a right of rescission, which means you have a 3-day right of rescission for loans, meaning you can change your mind and cancel your loan within 3 days. So, as a consumer, you're empowered to set healthy credit boundaries. We're going to look at the effects of bad credit.
In today's world, maintaining a good credit score is essential for securing more loans in the future and at more favorable rates. When you have a bad credit score, your chances of getting approved for a new loan plummet, causing things like buying a car or starting a small business to push further out of reach. And even if you do get approved for a loan, it'll almost certainly come with extremely high interest rates, making it all the more difficult to repay. If you find yourself in a pattern of not being able to repay your loans, then several consequences may occur. For example, you may have trouble getting a phone contract, setting up utilities, renting an apartment, or in some cases, even securing employment. Add phone calls from debt collectors and you can see why bad credit can be so stressful. Loans are not the only thing that costs more with bad credit. A poor credit score can also lead to higher insurance premiums since insurance companies see you as a greater risk. Fortunately, however, there are ways to repair bad credit. Only approved entities can offer credit repair as regulated under the Credit Repair Organizations Act. Credit repair can include disputing information about bad debts and collection on credit report, etc. To rebuild bad credit, start by getting and staying current on your existing charges, like rent and utilities, and try to keep your credit card balances low. To help meet these goals and better manage your credit in the long term, you can take proactive measures such as setting up payment reminders, refraining from opening new lines of credit, and seeking credit counseling. Working your way back from a bad credit rating is hard, but it's not impossible. Be patient, and over time, your good habits will pay off. And as the case with many things in life, the best strategy is prevention.
Okay, a little knowledge check. Which of the following is a possible consequence of bad credit? Difficulty getting a loan, higher interest rates, higher insurance premiums, or all of the above? Lots of D's, all the above. That is right. I want to call out as well higher insurance premiums. That's something a lot of people don't think about as well when we're talking about credit, but it can affect your insurance rates as well. So once you have bad credit, there's nothing you can do to fix it. Is that true or false? That is false. Okay, so this one, again, there's no right or wrong. But at Commerce, what we do when we do trainings is we make an I will statement. So we like to make a commitment based off something we've learned. So for example, I will set up automatic payments so I never miss any payments. What are some I will statements from you all today? There's some examples, or if you have something different. I will work with a credit counseling company. I'll pay down debt. I'll check my credit report. I will apply for a secured card or something else. Go ahead and share what you are going to take away in the chat. I will check my credit report every year. Yep, that's a great one. I see some typing, so I'll give it just a minute. I will work with a credit counseling company. Excellent. I will check my credit report every year. Perfect. So after each course, oh, one more. I will stagger when I pull my credit reports from annualcreditreport.com. Excellent. I love free things. So that is perfect. So at the end of every course, it's going to ask how we feel. We're going to say we feel pretty confident about understanding credit reports and scores now. So this is where it's going to look different when you take this on your own. So after you've completed your course, you'll have a couple different things here. You have a certificate if you'd like to save that, saying that you completed a course. You'll have an action plan, which we're going to dig deep into that. And there's Explore Commerce Bank Solutions. So if you would like to look at the commerce products like secured credit cards or different loans, those are all linked there. But right now we're going to look at our personalized action plan. And this is going to just be based on like the credit score we put in and different information that we put in our example. So when you take this after the course today, yours will be personalized to you. So it's going to show us our score and an analysis, our perception. We said we're not so sure and now feeling pretty confident. Poll results that we took, how we compare. And this is the meat and potatoes. So our personalized action plan. So based on how I answered questions in these quizzes, what do I need to do? It's great to have information, right? But my milestones will give you personalized next steps that you can take. So I should be checking my credit report at least once a year. I should apply for a secured credit card. I should keep my credit utilization low. I should always make payments on time. And I should start making payments on my student loans. So those are my action plans. Again, yours will be different. And then a fun little completion at the end. So does anybody have any questions about my milestones before we wrap up with our action plans here? I did also want to point out, Hung, you said you could register for the next sessions on Handshake. You do have a link to Handshake in the upper right-hand corner, right on my milestones there as well for easy access. But if not, I will go ahead and go back and show us some more resources. So we have a few call to actions for you all today. So you'll want to take that quiz that we took called Understanding Credit Reports and Scores and fill out that credit score tool to get yourself an estimate in 2 minutes or less. And you can play around with it like I did too, like what might my credit score be if I miss a payment or if something else were to happen. And then one other call to action, you're going to pick one of these three depending on what your situation is. So after you have an estimate of what your credit score is, you're going to look at one of the following Start Here guides. So there's Getting Started with Credit, Getting Started with Improving a Poor Credit Score, or Getting Started with Improving a Good Credit Score. And those are all linked and will be sent out to you afterwards. And then one more thing, to check your credit report at least once per year on the annualcreditreport.com. Set up automatic bill pays. And if you have credit card debt, there is a credit card pay down tool that is also very helpful. And it can kind of strategically tell you the best way to pay down your credit cards while saving the most money. Right, and that is all I had for you all today. I'll leave some time for questions in the chat. If not, I will pass it back to Hung to wrap us up. Thank you all.
Awesome. Thank you so much, Cassandra. If anyone has questions, you can feel free to use the chat feature and ask them now. Or if you'd like to come off mute, just raise your hand and we can unmute you as well.
We did also, sorry, I forgot to mention, before you leave today, we did also have a survey so that we can get some feedback. We're always looking to improve our sessions. So that link is in there. It's just about 5 questions. If you could take that before you log off, we really appreciate it.
Awesome. Any questions? Also, a huge shout out to everyone who joined. Lots of great engagement. So thank you for that. Thank you, Julie. Thank you, Jade. Awesome. And then if you do have any questions later on, maybe you think of them tomorrow or something, feel free to email us and I'll make sure that gets through to our commerce team as well.
Yep. And then I have my information up as well too. Either way,
There you go.
whichever is
Perfect.
easier. And if I don't know, I'll find someone who will. So
Awesome. Well, it looks like you did a fantastic job. Doesn't seem like we have any questions at the moment. So we can go ahead and conclude our session today. Just as a quick reminder, we'll be sending out the recording along with the survey. And we really appreciate if you could take a moment to complete those surveys there. And then, of course, we'd like to extend a huge thank you to Cassandra and the Commerce team for your time and your valuable insight you shared today. Your expertise in the financial world is such a great information to us, and we truly enjoyed the presentation. For the rest of us, don't forget to keep an eye out for the upcoming Quest sessions. We also have Commerce Bank joining us for later sessions of this year, so please keep an eye out for that. And then other than that, wishing everyone a fantastic rest of your day. Take care. Thank you.
thank you. Bye.